Go and kick things off. Hey, good afternoon, and welcome to everyone who's joined us, and welcome to Financial Literacy Week powered by U Mortgage, and welcome to our Insurance 101 session. So again, welcome. You'll see a few features available to you. You see a chat, a Q&A, you would see some polls come up. We highly encourage you to interact, ask questions as much as possible, use the Q&A, use the chat, to get the most out of this session. And we're really happy to introduce Brittany Sennett. She is with us today to present our Insurance 101 topic, and she is a financial advisor with Northwest Mutual. So with that being said, I'll pass it over to Brittany to take over. Welcome.
Thanks, Ryan. Welcome, everyone. So welcome to one of my favorite topics to educate my clients and people on: insurance planning in your financial plan. Maybe isn't always the topic you want to talk to other people about at parties and things, but definitely a super important topic to make sure we are covering, especially as you're, working with companies like U Mortgage to purchase properties for yourself or your families and continue to grow your wealth within your family. My name is Brittany Sennett, and I just want to tell you a little bit about me before we dive into the topics of life insurance, disability insurance, and long-term care. And I see people already dropping some comments in the chat. Let us know where you're from today, and if you have any questions or things you're hoping to cover in the session, just want to make sure we can tailor the content to meet your needs. And Kathy, I see she's looking to join us today to learn about how you know if you have the correct levels of insurance. So we'll make sure we talk about that in our session today. So a little bit about me. My name is Brittany. I'm from Michigan. I actually went to the University of Michigan for my undergraduate degree, and that's a picture of me, my husband, who's a Penn Stater, and my best friend and her husband at a Michigan-Penn State game a few years ago at the Big House. We actually won that game, so really exciting. I love Michigan and Michigan football in particular. My husband and me, Tom, in the center, we got married during COVID, so we had a COVID pop-up wedding in Rittenhouse Square here in Philadelphia, which is a nice, fun square event, local space here where we met in the square and had some friends and family join us for a quick wedding. And then we actually welcomed our first son in January. His name is Thomas as well. He's trying to put him to sleep right now, so hopefully they don't cause too much noise. But just really grateful to be here, to be sharing with you. My dog Toby's also here on the slide. He hopefully doesn't make an appearance. He can knock through my door. So, but this is me, my family. We live in South Philadelphia, and I've been out here in Philly, goodness, since 2008. So been here quite a while. a little bit about my why and how this is connected to what we're talking about today, life insurance. So this is my mom, Lori. My mom, Lori, actually passed away in 2011 due to a rare type of breast cancer called inflammatory breast cancer. And she was diagnosed with cancer in 2010, actually just 2 months after losing her job in January 2010. She was diagnosed with cancer in March 2010, and she only had insurance coverages through her employer. So when she lost her job in January, she lost her insurance benefits through work. And then when she got diagnosed with cancer in March, she became instantly uninsurable. In July of 2011, my mom passed away. I bought my first house. I turned 25, and I actually had to help split her funeral expenses with my grandma and my uncles because my mom didn't have any life insurance to help cover end of life expenses. Now, I'm sure my mom had intended to have life insurance and had intended to have that conversation with someone. But, she was a single mom. She had 2 kids. Life just got busy. And I just don't think she ever found anyone that really she trusted to have that conversation for herself and for us. So, when my mom passed away, I started working with a financial advisor to make sure that I was putting the right planning in place for me and my future family. And then through my relationship with my advisor, I actually left my job as a consultant and became an advisor myself because I'm just so passionate about making sure that especially women have access to this type of information as we continue to grow our wealth and become really prominent in the family's financial structure. I just want to make sure that women have a safe place to have these conversations, and life insurance is one of the many financial topics that I talk to a lot of my clients about. So, I wish my mom was still here, obviously, but because of her and her legacy that she left with me, I'm able to help others now as a role as a financial advisor, make sure that they're making sound financial decisions for them and their families. So a quick note about today's agenda. So this is my son Thomas just the other day making a silly face. But Mom, what is life insurance and why do people need it? So we're going to cover a number of different insurance topics today. Life insurance, which I'm sure most people have heard of, some type of life insurance. We'll talk about term and permanent insurance, brush on those topics quickly. We'll talk about disability insurance, which is also called like long-term disability or short-term disability insurance that you might have heard through your employer, why that's a really important insurance to talk about, and actually how you are actually your greatest asset in your financial plan. And that's where the disability insurance comes in. And then we'll also touch on briefly long-term care insurance, which is an increasingly important and growing topic as I talk to clients who either have relatives or family members entering into retirement, or as my clients themselves are preparing for retirement, ways to protect their assets with things like long-term care insurance. As we live longer, we tend to need medical care in our retirement years, and we'll touch on that briefly today. And also for everyone's benefit, just so you know, Ryan dropped a guide to life insurance in the chat that just goes through some different life insurance topics and definitions. So feel free to download that free resource and look at that after the session today. You can always reach out to me with any questions that you might have. So first, I want to show you, if you joined me earlier for the financial planning session earlier today, you maybe already saw this diagram, but holistic financial planning actually starts with risk management planning, with protection planning. So these items on the top, we actually discussed in the investing seminar I just did earlier and the financial planning seminar, ways to align your goals and to build out a plan with strategies that will help you grow your wealth in align with your timeline and your goals. And you'll see here on the base, the foundation of this strategy are these disability, life insurance, and long-term care insurance products, right? So ways that we build our financial plan on a foundation of risk management and protection. It's kind of the safety net of the plan that's there to make sure that everything else above it stays in place and can operate as it's intended. So to that end, what is risk management? Risk management is protecting your ability to reach your goals, even in the face of things that are beyond your control. Things like being in an accident, an injury or illness, or in the worst case, dying too soon. These aren't the kinds of things everyone likes to think about, but if you don't manage these risks, you could end up derailing other parts in your plan when something unexpected happens. So we're going to dive into life insurance first. And I just want to ask the group, what first comes to mind when you hear the words life insurance? You can think it to yourself. You can answer in the chat. What first comes to mind when you hear life insurance? And as a follow-up, for those of you that have some life insurance, why do you have it? And if you don't, why are you here today thinking about it? So I'll give you a couple seconds to drop your thoughts in the chat if you want, or just to think about these questions for yourself. What comes to mind when you hear the words life insurance? Why do you have it? And why don't you have it? Why are you thinking about it? And I'll tell you that oftentimes when I talk to people about life insurance, the first thing that comes to mind is dying, right? So just some kind of like silly means, I guess, to lighten the mood around death and dying too soon. But reality is that a lot of people think about life insurance to be there to protect, as Kathleen is posting here in the chat, to protect their beneficiaries, to leave their legacy, to leave something behind so that they're not leaving their family with a financial burden. If you were to pass away too soon, what are the types of things that maybe you'd want to have those dollars help cover if you couldn't be here to provide that support to your family? Is there a mortgage that you're trying to pay off? Do you have kids and you want to help them go to college? Would you want to cover the costs of your child's future wedding if you couldn't be there to attend? Do you, expect support from any family in the future? Do you want to leave a certain legacy? Do you want to be able to just, have your family take a couple of years off from work and just enjoy life if you couldn't be here? There are a plethora of reasons why people use life insurance to support end of life. And so that's just some stuff that we can dive into a little bit deeper today with the life insurance conversation. So let's dive in and just talk briefly about different types of life insurance. At a basic level, there's term insurance and permanent insurance. And I'd like you to think about them as term insurance is similar to renting a house. It's temporary. It provides coverage for only a specific period of time. And that could be 10, 20, maybe 30 years, or however long you decide to pay for your coverage. If you pass away during that time frame, as long as your premiums have been paid, of course, your beneficiaries will receive a payout from the policy. Once that term ends, however, or you stop making the payments, your coverage ends too. So think about it again, like renting an apartment. When you rent, you have a home for a length of your lease, or as long as you keep paying your rent. But when the lease is up, or you renew the lease, when the lease is up or you don't renew the lease, then the term is done. Because term insurance is designed to be in place for a specific amount of time, most people buy term insurance to cover financial obligations that will disappear over time. So things like mortgages, school loans, business debt, the cost of raising your kids through college, things like that. Term insurance is also the most affordable type of life insurance, and it gives you coverage for the lowest initial premium. So premium are the payments that you make towards a life insurance policy each month or each year. It can be a great option for people who are just starting out or who only need it for a certain amount of time. So term insurance is like renting a home. You have it for a specific length of time. Question for the group, again, you can ask this to yourselves or answer it in the chat. What percentage of people do you think actually pass away within the length of their term insurance policy? Meaning they have a term insurance policy that they've been paying, they actually die during the length of that term, and so their beneficiaries receive a payout. Any guesses, percentages of people who own term insurance that actually die during the length of the policy and the policy gets paid out? Give you a second to guess. Any guesses? Only 3%. Ryan, that was close. Only 3% of people who actually own term insurance policies actually die within the term. Now that's like actually good news, right? We don't want people dying. And in fact, if you want to extend the probability of you living, perhaps you buy term insurance, because there's a 97% chance that you're not going to die during the length of that term insurance policy, right? the converse to term insurance, however, is permanent life insurance. So if term insurance is like renting an apartment, permanent insurance is more like owning a home. Permanent insurance pays out 100% of the time because people own it until they die. That's where the name permanent comes from. It covers you for as long as you live. And because it has a guaranteed payout, assuming that premiums are paid and the policy's in good standing, it's more expensive than term insurance. But because you own the insurance for life, as long as you keep paying the premium, you actually build what's called a cash value within the policy. It's like how your own home builds equity over time. And over that time, the cash value becomes, in some cases, quite significant. And that's important because some people use things like cash value. If they're business owners, they can take loans against their cash value with a bank to get money to support their business. If they're in retirement and the market is taking a dip, some people take out cash value to supplement their life, because just because the market dips doesn't mean we all don't have expenses to pay, right? Even especially those in retirement. And in some cases, people, take out their cash value or borrow against it to buy homes, help, kids plan for a wedding, things like that. So the cash value has a lot of flexibility, and it's a living benefit that accompanies the death benefit of the permanent insurance. So I just have one slide on these two types of insurances. I can answer questions or go deeper into this topic if we have time. So I'm going to move forward at this point, but we can always come back to this and dive deeper if you have questions or want some more clarity around the different types of life insurance. But basically what you need to take away from this, term insurance is like renting. You have the policy for a specific length of time, and then once the policy term ends, you don't have coverage anymore. Whereas permanent insurance you have for your entire life, and it also provides a living benefit in the cash value that you can access while you live, while also maintaining a death benefit for your beneficiaries when you die. So those are the two types of life insurance at a high basic level. Kathy, your question, or Kathleen, about how much insurance you need. I like to use the acronym DIE, die, try to lighten this up as best as I can, to help understand what we might want insurance to cover if we couldn't be here for our loved ones. So D stands for debt, and that's usually things like mortgages, credit card, business debt, maybe some school debt that might not be forgiven when you pass away. So D is for debt, trying to quantify that. I is for income. Now, if you're maybe the main breadwinner in your family, or if you and your partner, obviously if you're in a partnership and you're designing a life with two incomes, if your income goes away, that could drastically impact, the future for your partner or your family. So I stands for income. And, I guess at a basic level, if you weren't here, how much income would you want to leave for your loved ones so that they could still live the life that, they were planning to live with you, or so that they could still do the things they want to do, or frankly, just so that your partner or your family could take a year or two off to just, mourn your departure. So I stands for income. It can mean a lot of different things for different people, but I is for income in the DIE acronym. And then finally, E is for education. And this really applies if you're planning for any children that might be, seeing, college in the future for them, grandchildren, children, nieces, nephews, etc. Generally, that's a really important area to focus on for people in insurance planning. And then finally, another number that we include in the calculation, which isn't part of the acronym, is just end of life expenses. And typically end of life expenses would be like funeral costs and things like that. I usually estimate that to be around $25,000 to $50,000 for a family, which sounds maybe kind of outrageous, but when you're buying, burial plots and, taking care of other end of life things, those numbers can really add up quickly. And so we account for end of life in addition to debt, income, and education, which tend to be kind of the most popular areas that we're looking to cover with life insurance coverage. Any questions on this before I move forward? Again, I can come back to this, but I know, Kathleen, that you had this question in particular. So any other questions on this? Otherwise, I'll move on to disability income insurance. All right, again, if a question comes up, let me know. We can come back to that section. So what do you think is your most valuable asset? Think about that. People often think that their home or car or even their investment accounts are their most valuable. But when you think about it, you wouldn't actually have those things if you didn't go to work and earn an income. So your ability to earn an income is actually your most valuable asset. And actually, when I talk to people about risks to manage in their plan, most of us are most afraid of dying. I'm very afraid of dying. I think a lot of people are afraid of dying, right? And so emotionally, we think that the biggest risk is if we weren't here, right? And so life insurance feels like the most important topic to discuss. However, if something happened and you couldn't go to work, but you were still living and maybe you still needed, medical care, if something happened to you, you were still living, so you still had, to eat and do all the things that, carry through life, it would still cost money to live. You'd still be living, but you wouldn't be actually earning an income to help offset those expenses. So actually, in many cases, the bigger risk to your financial plan isn't if you pass away, but if you become disabled and unable to earn your income, and your income goes away and you're still here. That's actually one of the bigger risks to your financial plan. And in fact, if we look at the statistics, 1 in 4 employees will be disabled for 3 months or more during their career. Now, 3 months or more, 3 months is okay as long as we have a 3-month emergency fund, right? So the problem actually becomes longer disability periods. If it's more than 3 or 6 months, we deplete our cash savings. And then what do we do if we aren't able to earn an income? So that's where something like planning for disability income insurance comes to play, to make sure that we're protecting your income and your future income if something was to happen to you and you weren't able to perform your job duties. Wanted to try and quantify this a little bit because I know it's a little bit hard to kind of think about earning income potential, out into the future. So I said, what if you were 30 years old and you're making $135,000 a year today? We increase that income by 2.25% over the year. So just accounting for just general salary increases, no major bonuses and things like that, and project that out to retiring age 65. Your total income earnings, if you wanted to replace your income that you would earn, your total income earnings would be $5.8 million across that 30-year period. If you wanted to replace that income with a lump sum, like invest dollars today to replace that income you would earn in the future, you would actually need $2.6 million invested today, earning a 5.6% return to replace the income that you will earn going to work every day and earning a paycheck year over year over year. So obviously these numbers look different depending on what your salary is and things like that, but that's a lot of money, right? And I know a lot of us don't have $2.6 million to just invest into the stock market to replace our income, right, over the next 30 years. So that's where the disability income conversation comes into play, to make sure that your earning potential is protected during your lifetime. What's involved in protecting your income, disability, long-term care, and death? And most people think that something catastrophic actually needs to happen in order to take advantage of something like this disability income insurance, But the reality is that actually most disabilities are caused by things like heart attacks, stroke, cancer, back problems, pregnancy complications, even things like migraines. Those are the most common occurrences actually for disability claims. And that's sourced from our own disability data over many years. And some of you probably on this call are thinking, hey, why is she talking about this? I have disability insurance through my employer. And you do. And you probably have good coverage through your employer. But most group plans actually have some sort of cap, usually around 40 to 60% of your income. And that's usually before taxes. So think about your paycheck, what you earn right now. If your employer covered 60% of your income before taxes, your paycheck might actually be cut in half once you account for taxes if you weren't able to go to work and earn your paycheck every day. So what I talk to a lot of my clients about is how we account for that gap, that other 40% if your company is covering 60. And fun fact, another thing, if you receive bonuses or some other variable compensation that is a big part of your total comp package, the disability insurance program that your work provides most likely does not cover variable comp. It only covers the base comp side. So you might actually get 60% base comp covered, but the gap of your total comp could actually be greater if variable comp isn't taken into account there as well. So that's where I can be impactful in designing an insurance program that fills that gap, because I can actually help cover either the 40% gap that maybe the base salary isn't covered, but also any other additional variable compensation like bonuses or commissions that your current group coverage doesn't cover. So let's take a look at this. Again, I like visuals and numbers and seeing things kind of side by side. So let's take a look at two jobs. The jobs are exactly the same. Your commute to work is exactly the same. The the day-to-day work is exactly the same. There's one job that offers you 60% income replacement if you're to be disabled. So that means, if you were making, $7,800 a month based on your salary, if you become disabled, the company would pay you $4,700 a month if you couldn't do your job. Conversely, job number two or job B, again, same job, same other commuting and components are the same, but they have a 98% income replacement plan in place. So if you become disabled and unable to work, you still are able to earn $7,700 a month, even if you couldn't go back to work and do your job full time. So if you were presented with these two options, which job would you prefer to take? It's pretty simple, right? Job B has greater protection than job A. That income is more fully covered. So again, this is just more of an apples to apples comparison to try and show you how the numbers shake out with a group plan versus the gap that we could cover with some personalized coverage that you could get through disability insurance by working with someone like me. So next topic is long-term care. I wanted to pause for a second and see if there's any questions about the disability. Again, I can come back to this section. And of course, I'm using the number 60%, but your employer might cover 66% or 40% or 50%. So of course, the numbers and the calculations are going to look different based on your personal situation. But any questions here about disability income insurance? I should also mention that the type of insurance that we're talking about here is long-term disability, not short-term disability. So you might see the acronyms in your employee benefits package. STD would be related to short-term disability, and then LTD would be long-term disability. So that's the longer-term disabilities are actually the disabilities that pose a greater threat to our financial plan and our financial security. So that's where I usually spend more time with my clients to make sure that there's a plan in place there to protect them. Okay, take a sip of water and then we're going to move on to long-term care. Alrighty. How many of you are providing care to a loved one or have in the past? I know when I work with a lot of my clients, as their parents and loved ones are aging and moving into retirement, a big question that they ask is, how is my plan going to be impacted if they need help and if I have to help them? And I think this topic of long-term care for your parents, even for yourselves, is one that I talk to a lot of my female clients about, because as women in the families, oftentimes the burden of care falls upon the woman, whether it's to care for a sick child, to take time off of work to care for the child, but also for thinking up a generation to take care of the parents. Often it's the woman that is expected to take time off work and to care for the loved ones. So long-term care planning isn't just about taking care of the person that actually needs the care and taking care of their assets, but it's also about taking care of the people around them who otherwise might have to put their life on hold to care for them, potentially, depleting their savings and putting their goals and things like that on hold as well. So the long-term care topic can be really important for people as they age and get into retirement, but even for some of us that are many years away from retirement and could potentially need to plan to provide care for someone. So long-term care services help people with chronic illnesses, disabling conditions, or cognitive impairments to get through their daily routines. Care is often provided in the patient's home, but could happen in an assisted living facility, adult daycare, or a nursing home. And you might be surprised to learn that long-term care is not generally covered by Medicaid, and it's not covered at all by Medicare or health insurance plans. If you or someone you love needs long-term care, the financial, emotional, and physical impact could be devastating. It's something that you should think about as you develop your financial plan, and frankly, as you talk to your parents about their financial planning as well. So that was a really quick chat about long-term care. I guess the other thing I could mention about long-term care, sorry, I thought I included a couple more slides. There's generally people need to qualify for long-term care events. There's activities of daily living that you would need to not be able to do to activate in order to get access to a long-term care plan. And those are things like, bathing yourself, dressing yourself, feeding yourself, moving or transferring, like being able to toilet, go to the bathroom, and I think I covered all 5. So that's a definition that's often included in long-term care insurance plans that some people, kind of have questions about. Typically the coverages require you to meet 3 of the 5. At Northwestern Mutual, actually, our coverage only requires you to meet 2 of the 5. So that's an area where, kind of making sure you review options at different carriers and review the definitions of what constitutes a long-term care event can be really important if you're looking into long-term care insurance for yourself or for a family member. So any questions on long-term care, or even we can revisit questions about life insurance or disability insurance as well. So as I said, awesome, thank you. Not at this time. So we talked about 3 different risks that we can plan for in the financial plan: disability, long-term care, and death. 3 unpredictable circumstances you can protect yourself against with proper planning. And then, as I said earlier, alluding to it with the definition of a long-term care event, for example, different companies also have different definitions when it comes to disability in your own job. Most companies agree that, when someone's dead, they're dead. So that one isn't quite as contentious as disability and long-term care. But when it comes to reviewing even your life insurance options, if you're looking at term or permanent, the company that you choose to work with can make a really big difference. And so when you're looking for someone to work with to have these types of conversations, I like to remind people to keep 3 things in mind. And that's 1, find a trusted partner, someone that you trust, someone that hopefully you enjoy speaking with, because the truth is that if something happens, you or a family member are going to need to rely on that person to help support them to either execute a death claim or execute a disability or long-term care claim, which could be pretty laborious and require a lot of time with that person. So first, find someone you trust that you like. Look for quality. A company's longevity and financial strength is really important in this space. Ideally, companies that are specialists in the areas of life insurance, disability insurance, or long-term care. And then work with a company that will be here when you need them. Again, you want to look for financial strength and a history of financial stability when you're looking at a company. And some areas that you can look for are things like AM Best ratings, Fitch ratings, Moody's, and S&P Global ratings. And I happen to work for a company, Northwestern Mutual. I'm a non-captive broker for these types of coverages, which means I can represent Northwestern in my client conversations, but I also have access to 100 other carriers that also offer these coverages, so that we can make sure we're matching the best product and best company with my clients and their needs. So That's the extent of my presentation today on the insurance topics. If you have questions or things that came up, I'm happy to dive into those topics deeper for you. This is a picture of me of when I was traveling in Colombia a few years ago. But yeah, happy to take some questions. If not, then I can also leave my contact information up on the slide. If you have questions, you want to review any policies that you currently have, or you're curious, to get a second opinion on what coverages you might need, I'm happy to set up time to chat. The call is totally free. You can reach out to me by email, Instagram, I'm Hello Brito, or you can book time with me directly in my calendar by scanning the QR code or typing the link into your URL browser and booking time there. So Ryan, I'm going to see if there's any other questions. I haven't had a chance to look at the Q&A box or the chat.
Yeah, I haven't seen anything pop up on my end yet, but yeah, we'll see if anything comes across here in the next minute.
Okay, cool. I can tell you a couple of things to know about life insurance and all these insurances actually in general. Actually, I'll just stay on this slide. One thing to know about insurance is that it's a discriminatory product by nature, which means, if you want to open an investment account, you can pretty much just go online and enter your information at any time of your life. You can open an investment account, assuming that you're like over 18 or whatever, right? Like a 3-year-old can't open an investment account, right? However, insurance products, they have an underwriting process that's part of the application process. So your medical history is reviewed. In some cases, your family's medical history is reviewed, and you have to also often go through like a medical exam to review your height and your weight and some blood and urine samples and things like that. And because of this process, like my mom, when she got diagnosed with cancer, there's no one that's going to write insurance for someone that got diagnosed with, cancer with a survival rate of like not very good, right? So, there's just events and things that happen in our lives that could either, they might remove the opportunity or the possibility of adding insurance to your financial plan. And so it's also just really important when I sit down with my clients that people have a really thorough understanding of these plans and these policies, because they might not always be options that are available to us to put in layers of protection in the financial plan. So, I often talk to people when they're getting engaged or getting married or having a kid or buying a house, because those tend to be really important and big life events where they're starting to think about, their money, their income, they have more people to protect. And that's when these conversations really become, really relevant, I think, to a lot of just wanted to make that note about insurance because it might not always be available, unfortunately. And, I think we're always getting older, and we're unfortunately not always getting healthier as we age. And so just something to realize with life insurance, disability insurance, and long-term care. So we got a question from Gary. Is there an average general age where life insurance is suggested, either term or permanent? So it's actually really interesting. You can get a permanent insurance policy on a newborn. So you can really write life insurance for anyone at any age, depending on the type and things like that. And the answer just really depends on what your goals are and what, how you see your life unfolding over the years. Because life insurance isn't always an available option because we can't control our health and where things go for ourselves 100% of the time. When I sit down with people and if they're talking about having a family or buying a house, we often start talking about life insurance, especially because term insurance, something that's cool, and I can go back to the term insurance page so you can take a look at that. When some companies that offer term and permanent insurance, when they offer both, you can actually convert some of your term insurance or all of it into permanent life insurance. And so in a lot of ways, the term insurance kind of is a placeholder in your plan for more strategic life insurance planning in the future. So for a lot of my clients, they might buy some term insurance while they're young and healthy with the plan and intention of converting some of that into something like permanent insurance. So it becomes more of an asset in their plan. later down the line. So, but Gary, it really depends on, your family history, your financial goals, and what's going on in you and in your specific circumstances. But I think it's always good to just review your options, especially while you're young and healthy, because you'll likely get the best rates at that time as well. Good question. Any other questions, either about life insurance, disability, or long-term care? Well, I dropped in the chat, or Ryan dropped actually a life insurance brochure that kind of goes into some of the life insurance details with more specificity. And so if, try and find that, download that if you want to take a look at that later and get back to me with any questions. This is my contact information. Again, you can scan the QR code to get time on my calendar as early as next week, or always, shoot me an email if, anything pops up and you'd like to discuss these ideas at another time.
Yeah, thank you, Brittany, and we can take a pause here for a second, see if any questions come in. And in the meantime, just as a reminder, we do have 2 more sessions that are running today. So we have cryptocurrencies and blockchain happening at 4:30 Eastern Standard Time this evening, and then NFTs happening at 6 p.m. Eastern Standard Time this evening. And I'd also like to thank Brittany, who participated here in 3 sessions today with our group for Financial Literacy Week. This was a tremendous group of sessions, and provided so much value and insight into things like insurance and investing and just like financial planning, which is something we all need to do as humans and all need to be aware of and take action on. So thank you so much for being here with us today.
Yeah, I appreciate the time, and I was really grateful that U Mortgage was putting on this Financial Literacy Week, because some of people's biggest purchases in life is a house, and understanding how to manage that debt or how to leverage it appropriately and protect it in your plan. Those are all topics I talk to my clients about. And so I'm just really grateful to you all to putting out this content and really trying to educate and empower your audience about these important financial topics. So thanks to you guys.
Yeah, really appreciate that. And thank you to our attendees who showed up today. We really hope all these sessions that you've been to so far have been beneficial for you. It also wouldn't happen without you and the attendees showing up to drive some of these things. So thank you. We'll wrap up a little bit early here. If there's anybody who you think this could reach to, there will be a recording played this weekend as well as all of the sessions that are happening, of course, across the week can get replayed over the weekend and things too. We also recommend to download that resource. But we'll go ahead and wrap up. And again, thank you, Brittany. Thank you, everyone, for attending.
Of course. Thanks for having me.